The great real estate stock drop. What does that mean to property prices the next quarter? Stay tuned. We're going to talk about it right now. Mr. Michael Sillage, good morning.
Good morning, Mark. How you going?
Good, bud. Good, bud. We've been analysing some of the numbers at the moment with real estate, and when people are watching realestate.com, buyers are watching realestate.com and looking at domain.com.au and agents' website. The big comment that we're getting from all buyers out there is there's no new stuff coming into the market. And then we're looking at also equally on the other side of sellers, and sellers are looking at the market at the moment thinking, you know what, should I squeeze it on the market before Christmas? I don't really have a good run ahead of me. Maybe I should just hold into the next year, which then means they're going into probably February next year. What do you think about that?
It's an interesting one because, like you said, there's not a whole lot of new stock hitting the market. And when you're looking at the amount of properties sitting on the market right now, a lot of them, and we were discussing before, days on market has stretched out a lot. So days on market now has stretched out. Maybe in the peak of the market, a property might sit on the market 2 weeks on average, but 4 weeks maybe maximum. Now properties are sitting there 3 weeks, 4 weeks, 1 month, 2 months, 3 months, sitting on the market. And what we found is the stock levels, even with these increased properties staying on the market, are not going up. And what that means is there's nothing new coming on. So it's interesting to see in terms of, from a vendor's perspective, when you go back to the simple supply and demand with property, when there's no new supply coming on, as a vendor, it's not a bad time to be bringing property to the market.
So can I just rewind that for a second?
Mm-hmm.
The metric.
Yes.
The metric that we've spoken about, or we're talking about in principle today, is days on market. Days on market is measured from the first day it hits on a website like realestate.com or domain.com.au, and then it's each day is measured to when the property is sold. Yes. Now, when the property's sold, you take that gap and you say, okay, it's 35 days. So, for instance, a typical auction, if everything goes to auction, typical auction days on market would be 28 days. Your period there. So, where are we sitting at with days on market? Let's use DY for example. And if anyone's got any questions on days on market for their suburb, feel free to throw it at us right now. We can answer that potentially live. But DY is a good metric because there's 600 units a year that sell in that suburb. DY trades more properties than Sydney CBD.
That's a big number.
So it's a big number. So what would be the days on market, Michael, for DY 9 months ago, for example? And we are going somewhere with this, guys. Stay on, because we're going to be tying it back to some really important information and facts. Where would DY be days on market probably 9 months ago, 1 year ago?
About, I reckon, on average, so obviously some properties shorter, some properties longer, but about 3 weeks, I'd say.
Got it. So days on market were sitting at about 3 weeks. You reckon 3 weeks? I reckon 10 days. What is RP data? Days on market DY a year ago.
Yeah.
Okay, let's have a look. Units, DY, days on market. So out of interest, guys, this metric is supplied by RP Data, which is a huge data company, so it's good qualified information. It's exploded. Okay, so Michael, 3 weeks.
Yep.
What do you reckon that number is today? I'm not going to tell you the information yet because this is an agent at the coalface having a punt. What do you reckon the metric is today? So it was 3 weeks a year ago. What's days on market now?
Average days on market, taking, because there's all the outliers, the real long ones putting in. So I'm going to take a guess and say about 90 days now.
90.
I'm going to push it. I'm going to push
Okay.
really long on the other end.
So you reckon they triple?
I reckon it's tripled.
Bit more than triple, quadruple. Okay. So on that information, so you know, officially with RP data, days on market for DY has doubled on RP data for DY. If we grab another, let's grab another big suburb in Sydney. Do you want to grab? Should we grab Bankstown?
We can say Northern Beaches or go outside Northern Beaches.
All right, let's have a look at Bankstown. Let's have a look at days on market. 27 days.
27 days now.
Yeah.
Wow.
So
still good.
Which is pretty strong. Where we're going with this, guys, is is days on market, stock on market, real estate stock drop, and what no one's realised is that with a suburb like DY, we've been sitting at 690 properties for 9 months, same amount of property. But if you go off the back of what you're saying, Michael, and it's 3 times, 4 times more days on market, that technically means there's a quarter amount of property on the market that's coming on fresh. So there's more staying on, which then means there's less coming on. And now we're pushing into Christmas.
And we're noticing it as well with our buyer numbers. So all of our new properties that we're launching, because as a buyer, and if you're out there in the marketplace looking at the moment, you're seeing all the same properties advertised every single weekend. And when you see a new property come to market, like, oh goodness, finally something fresh I can go have a look at. And we're noticing that in our buy numbers, because that's a metric that we can track as agents as well. And all of our fresh stock, when we're bringing it to market with an appropriate price guide, we're getting really big numbers through the opens.
So what does that mean for someone who wants to put their property on the market in the next 2, 4, or 6 weeks? 6 weeks is Christmas, by the way.
I know.
And that's a genuine question. What does that mean the next two if they put their property on the market, 2 and then 4 and then 6, in your opinion?
So the bottom line is a lot of, first of all, Christmas time, a lot of agents are away over Christmas. We're one of the very few agencies that are open over that Christmas period. So
that's the scarcity.
That's a scarcity. So yeah, even more scarcity than what's going on right at the moment.
Yeah.
So the good thing is, for a vendor looking to put their property on the market, yes, you can physically put it on over that Christmas period. It's not a bad time. You get a lot of eyeballs on property, especially on realestate.com. I think that's when they track normally their largest numbers in terms of people scrolling through and the views on property. But in terms of putting your property on over the next 2, 4, or 6 weeks, right now, the biggest play in the marketplace, and this is not today's topic, but is interest rates. And people saying, okay, interest rates going up, pushing property prices down. That's not the only thing affecting the market. There's lots of other levers as well. And the other big one, like we've discussed, is the stock levels. And because the stock levels are so low, it's actually holding prices right now. And that's why we've noticed that on the Northern Beaches market, stock price levels have started to even out a bit, because that's such low stock level. If the stock level increases drastically, then it has another effect on prices.
Michael, sellers don't have the information to make a balanced decision in the marketplace. The only thing I'm seeing in the marketplace is interest rates.
Correct.
For me to make a balanced decision on selling my property, I'm not seeing the information about what days on market is. I'm not seeing the information on scarcity or the low stock on the market. I think this is a really important segment that we're running today, because it could well be a unicorn of a time because of scarcity. And let me drill down on scarcity. If you have a watch and they made 1 of 10 worldwide, they made 10 watches worldwide, and you own 1 of 10, and it's a good watchmaker. that scarcity drives the prices through the roof. If you are Casio and you've made 50 million units of the same watch, that drives down pricing. It happens with cars. A car that was becomes a collector when it's scarce. And I've got to now put that across to property. When scarcity is introduced, property values will go up. At the very least, if they don't go up, they'll stabilize. But scarcity is a really good thing for the property market. It's not good for buyers, and it is good for sellers.
And it's interesting, and you said it very well before in terms of the media is not reporting any of that. And the bottom line is, as good as the media is in terms of giving us information, they're there to sell newspapers, metaphorically speaking, e-newspapers these days. They're there to get eyeballs on and views on their content, which doesn't necessarily mean reporting everything you need to know. It's more reporting what people want to hear or what people are talking about at the moment.
And what they're familiar with, what they understand.
This is true. So with stock levels, it's not really as highly spoken about topic, but it is, as
auction clearance rates.
Auction clearance rate. There's so many factors that are affecting the property market more than just interest rates. And for something like this here, it is the silent killer, I think, at the moment that is holding the market as such. And the reason why is a lot of vendors now are just sitting on the fence. Obviously, prices have come back. A lot of people are holding on to their properties going, let's bunker down, work out what we're going to do next year. So for someone thinking now's the time to do that transition, you're not going with a lot of competition.
So, in conclusion, wrapping it up, what we've from today's topic, particularly if you just tuned in, just quickly to Ian's story. Ian, we're using StreamYard, StreamYard, StreamYard's the software. But the in conclusion, if you just clipped in, we're talking about properties on the northern beaches, which is a good metric because it's DY in particular is a huge suburb. We're talking about the scarcity of stock at the moment because they are staying on the market a lot longer. There's the same amount of properties on realestate.com the last 8 months. It's bloody rare for it not to fluctuate. It's been a deadline, flat, like that line. I've never seen a deadline like that. There's less properties coming into the market. They're selling 2 or 3 times longer than they would normally take. That is less selection for prospective purchasers out there. That is adding to scarcity, which the metric isn't out there in the media. And that scarcity is adding to more buyers for open houses, and it's introduced a floor in the market. So the market's not dropping any further for the last couple of months in our core area, which is a big core area. We do more volume than Sydney CBD.
It's very true. When we got a lot of turnover like that, it's a great metric to use. If it's a low turnover suburb, it's harder. But for a high turnover suburb like DY, it's a great metric. And the numbers don't lie. When we see the people coming through the open homes, we can see the amount of properties on realestate.com. We can look at RP data. It's great hard facts.
Wherever you are in Australia, if you do choose on the back of what you need to do and what we're talking about today, if you do choose to sell, magical question that no one ever asks is from their real estate agent: are you going on holidays? You got to know this. The next there's 8 weeks through December and January, and agents will list property and then go away. I'll say it again: they will list your property and they will go away. Ask your real estate agent, what are your plans with going away? Because if I'm going to spend money on marketing and going to the market, I don't want you to disappear. Now, I do think on the back of what we're saying, with scarcity, with low stock on the market, I do think it is an absolute brilliant time to hit the market.
You want your agent's timeline to line up with your own. If you're ready to sell now, you shouldn't be waiting on your agent, and vice versa. You should be running on your timeline. And if you're thinking of doing it, now is definitely not a bad time.
And that's a show.
Thanks, guys.
See you guys.